The Reserve Bank's chief economist has been asked about yesterday's inflation figures at an event in Sydney this morning. For more, we are joined by business editor Michael Janda. Very good morning to you, Michael. You were in the room this morning. What has Sarah Hunter had to say?
Yeah, Kath, look, she didn't give firm hints about what we can expect when the Reserve Bank has its next meeting on August 10 and 11. Markets, after yesterday's surprisingly weak inflation figures, have basically priced in the 0% chance of any rate move, any rate hike at that August meeting. I did ask the Assistant Governor whether they were being a bit presumptuous in that assumption that there's no chance of a rate hike. She refused to bite on that, of course. The Reserve Bank doesn't like giving such specific guidance about meetings. But what she did say is that those weaker than expected headline and core inflation numbers were actually not that surprising to the Reserve Bank. So even though that underlying inflation number came in 0.2% below the Reserve Bank's most recent forecast, that was largely due to the fall in oil prices and fuel prices that was unexpected, and that flowed through to some other prices in the economy. When you look at domestic parts of the economy, like services inflation, so-called non-tradables, there's still a very strong inflation impulse. So I think you could sum up the message from Sarah Hunter as, while the Reserve Bank may not need to be in a hurry to move rates at its next meeting, a rate rise is still firmly on the table because they're not convinced those domestic inflation pressures have yet come back down and are contained.
Can I just ask if there were any questions around the change to the fuel excise that the government cut and is looking at changing over the weekend?
Yeah, not too much focus on that, Kath. Obviously, that's going to increase the cost of fuel, which will feed into inflation on the one hand, but also take some money out of households' pockets and reduce the amount they can spend in other areas. So in some ways, that may help with this sticky domestic inflation. Of course, we've also just seen an increase in award and minimum wages, so the Reserve Bank's probably going to be looking at how that flows through to prices and whether businesses can pass those cost increases on to their consumers, or whether demand is too sensitive and weak enough from the rate rises we've already had that businesses just have to absorb those increased costs. If that happens, that should see domestic inflation pressures ease, and then that means the Reserve Bank might be able to stay where it is. And at the moment, the market's pretty much around 50-50 pricing on whether the Reserve Bank might have to move again at all.
OK. Well, we saw the US Federal Reserve hold rates overnight. Did the Reserve Bank respond to this?
Yeah. So I did ask the Assistant Governor about the effect of US interest rates on Australia. She said it's not a mechanical link between US interest rates and Australian interest rates, because of course overnight we saw 3 Federal Reserve members out of the 12 voting members vote to increase rates, and that has increased bets that the US Federal Reserve will lift interest rates in September to try and get on top of inflation, which has been above its 2% target for several years now. So despite President Trump wanting rates to fall in the US, it looks much more likely that the opposite will occur. Now, if that happens, it will put downward pressure on the Australian dollar. That makes imports more expensive and could feed the inflationary impulse through the tradables sector, and that could give the Reserve Bank a whole new headache. But that's a problem for later in the year. Probably not something they'll be considering closely at the August meeting, but it is one of the factors that keeps another rate rise firmly in play and means that the Reserve Bank's interest rate increase cycle, you just can't say that it's at an end at 4.35%. There is still a realistic chance we might see another rate increase.
Michael Janda, thank you so much for the update.